Hi, YouTube.
Hey, YouTube friends and family, it's your boy GB Reviews, and today I'm again back with my friend CD, who's a financial advisor with over 30 years of experience, and we're going to talk to you today about credit reporting, and what it is. Many people have asked me, like, what is it? And I'm like, hey, let's bring in an expert so we can talk about it. So, welcome, CD. Thank you so much for coming back with me today. It's good to see you.
Good to see you too.
Can you tell us a little bit about your background and what kind of got you interested in like credit, finances, all of those things?
Sure. So I started off in college as a teller, as a roving teller. And I realized my interest in credit and finances was a natural one because I really started to pay attention as to how people interacted in their accounts. So as a teller, a lot of times you have these rushes and they'll come in the morning, they'll come at lunchtime. And culturally, I was always curious as to how my white counterparts would interact on their accounts. And so this kind of gave me a front row seat being a teller. And so I would notice oftentimes a lot of white people would come in and deposit money into their account. More importantly, they would pay attention to the balances that they owed on their overdraft protection. And what I consistently started to notice that a lot of Black people would come in during lunchtime to take money out. And it would be in increments of $10, $20, $40. Most of the time, they would even mention that it was for lunch. And so I then started to realize culturally, Black people view money and credit different than their white counterparts. And the impression that I was left with through those, kind of fly on the wall experiences was that Black people look at credit as money, as that extra money. And white people understand the value of credit because perhaps they were taught certain tenets growing up. And so they understood that it's important not to owe anything. It's important not to pay interest on these small amounts. Again, going back to those experiences, I would notice how white people would come in and the first thing they would ask is, what's the balance on my overdraft? And a lot of times it would be less than $100. And they would look to deposit money to pay their balance out in full. Whereas on the flip side, I would notice how people would come in, Black people would come in and ask, well, what's the balance on my account? And, I was young and me being a smart ass, I would say, well, zero. Because that's how much was in their checking account, but they were meaning their overdraft protection. Again, another indicator that culturally Black people without that education viewed credit as cash. And so
Education in terms of financial education, right?
sure.
Not necessary, because what I've noticed is that folks who are highly educated,
Oh,
college
yeah.
graduates, definitely have operated in the same space. And also I think it's a generational thing. At least this is what I'm finding. Like the younger generation is definitely more versed in it.
Yeah.
Whereas I think folks of our generation and older, especially our parents' generation, they're like, whatever, credit was cash.
That's absolutely
So
right.
to that end, let's break it down. What is credit?
Yep. So credit is a repository of merchants that send monthly information or tape about how accurate and how consistent you are with repaying your debt to a particular merchant. And so these lines of information are called trade lines. And so typically, any place that you have a mortgage, a secured line of credit, an unsecured line of credit, or an open line of credit, those would be where you don't have a credit limit, so they're open. So a lot of times if people wanted to create credit, they would get their utility companies to report on their credit bureau because they have open lines of credit. Obviously, you don't have a cap on most utilities that you can use. And so that's a good way of doing that. Or getting a secured credit card is another way, and paying into that balance.
But American Express is an open line of credit too, right?
American Express is too an open line of credit. And so that is yet another thing. Some people just pay to have the card. I myself, I just paid to have the card. I have a platinum card. I have a business gold card. I don't necessarily have a standard card because why would I pay for a standard card? But having an open line of credit on your credit account listed as a trade line from a merchant such as American Express, quickly elevates your score. And the longer you have it, the better it is for you.
So, okay, so you mentioned two things that I think is very important. So, and I think this is what is confusing for a lot of people, not just, Black
Right.
folks, but I think for minorities who are coming new to the country, folks who just aren't used to the system here in America, right?
Mhm.
So, credit is your history of payments and transactions and lines of credit that you have at places, but people also understand that credit is the line of credit that a credit card would give you, right?
Yeah,
So how do you distinguish those two things, and why is it important that I distinguish those two things? Like,
sure.
I got a credit card, I'm just going to charge it. Why do I care what somebody cares about me paying my payment history?
Because that shows the risk and if you can be trusted with more. So when other future potential merchants or banks want to lend you money, your history gives them a good indicator as to how trustworthy you are with paying those items back. And so the difference, again, going back to an installment, that's a type of credit, a revolving, that's a type of credit, a secured and unsecured. And so an example of a secured would be a car or a house. An example of unsecured would be a signature loan. So you've not
Mm.
put down any sort of equity, only your signature as the promise to pay a particular loan back. And so your history is a huge indicator as to how big of a risk you are with paying that back.
So then, okay, so along those lines, so what is a credit report?
Yep. So a credit report shows that history. It is a 30-day lag time. So anything you would do today would take potentially 30 to 45, sometimes even 60 days to even populate on your credit report. So it is a snapshot of that payment history from 30 days ago, retrospectively back until almost the first credit line you've ever had, depending on if it's a negative credit or a positive credit account.
So if I'm looking at my credit report, I'm looking at a snapshot from 30 days in the past.
Correct.
So even if I get it today, it's not the thing I'm looking at today is from 30 days in the past. I can't be like, oh, look, my credit score is this today. It's
Yes,
really my credit score from 30 days in the past,
that's
even
right.
though that's how I reflect it to lenders.
Yes. And so yeah, the trade lines are 30 days old from the day you get them. They're just 30 days old.
Mm.
Now, the information as far as your address, your name, previous addresses, the number of inquiries, that's real time. And you, in fact, are the person that updates that information. So every time you fill out a credit application, let's just say you've lived at the same place for 10 years and then you move to a new place, and you fill out a credit card application and you put your new address, you've effectively updated your repository with these credit reporting agencies because they don't have any way of knowing that you've moved unless you've given them new information.
Okay, that's really good information. And so now we're looking at credit reports. You've explained to us what credit reports are. What's the range of my credit score? Like what like hey, I got 500. That's great, right?
No, so the range of the credit score, it's really an algorithm that no one except for the three major credit bureaus has access to. But obviously, there are some clear indicators as to how you can raise or negatively impact your credit score. So negatively impacting your credit score obviously would be is missing a payment and not paying something on time as agreed upon in your initial contract, right? And so positively impacting your credit report is the length of time you've had credit and actually how consistent you are with your payments. And so if you're supposed to pay a certain amount every month and you do that, your score will consistently go up. Also, the amount of utilization that you have for those credit lines. So if you have total credit lines that equal, for round numbers, $90,000 in credit, if you're over 30% of that utilization, that will start to negatively impact your credit score
Mhm.
because they want the credit card vendors and lenders and financial institutions want to see you use credit, but they do not want to see you overuse it. This is why the use of credit is a very slippery slope, especially in America, because we're not a culture of savers.
Okay. So, okay, so again, along those lines, so if I'm a credit card issuer, why wouldn't I want people to just be at max out 100%. It seems like that means that you're a good customer, right? You're spending money at 100%. I'm earning interest. Why is that not a good thing?
Because the likelihood of you not being able to either pay that credit card balance off or pay that credit payment due to life events then becomes significantly higher. And so
Mm-hmm.
if I'm a vendor, or if I'm a bank that you're applying to and I pull your credit and I see that you have one credit card with a $10,000 limit and you're at your limit, then I'm going to say that you probably won't get approved, or I would only approve you for a very small credit limit just until I can have time to see your history go up as far as, your positive payments, how often you're applying for things. So having too many credit inquiries within a period of time is also a negative impact. So that means you're seeking and looking for something. Credit is meant to show how reliable you are with payments. And so a lot of times I consider it like a pretty picture or of something that you like a lot and you never use. It's just there for display. So you whip it out when you want to get your car, you whip it out when you want to get your house, but you should not have it involved in your life as a normal place to go to for a resource of money. You should always consider your first resources as cash, depending on the transaction, depending on your goals, depending on where you are in your life. If you had the discipline to pay certain cards off every month, then that checks the box of I'm using the credit card. But then it also helps to mitigate the amount you would pay in interest, because maybe that card has a grace period where if you pay your balance off in a certain period of time, you don't actually have to pay the interest on that card. But the other important thing to having credit is just to make sure that you can show a history of how reliable you are. But then when it comes time for you to get those big ticket items that typically most Americans finance, you can get the best possible interest rates. If you took a side-by-side case study of someone who had, a high credit score, let's just say 800, and someone who had a 400 credit score. So obviously there's late payments there within the last 24 months. There's a lot of things going on that have been negatively impacting this person's score. And they go to buy the same item, let's just say a car. This person with the excellent credit score is probably going to get 0%, 6 months, no payment. They're going to get, any kind of term they want. This person here is probably going to have to put down more money. They're probably going to have to pay an interest rate of 13% or more, or up to, whatever usury laws are at the moment. And so they're paying for that poor, inconsistent payment history with everything that they finance, with everything that they get.
So you're saying that a person is rewarded for having a better credit score, which means that they have the ability to pay on time, they have access to resources, they actually have money. And so they get better interest rates, they get better different loan terms and things like that. But the person who is struggling to get by, who has a lower credit score, don't get that. That just seems counterintuitive. It seems like you would give the people who can't pay the better terms.
By and large, that's how it works, because we're dealing with a for-profit business, right? This is a for-profit industry.
Okay.
So all of these banks that lend out, they don't make a lot of money off of the people with A1 credit. They make their most money off of this subgroup called slow payers. People who will eventually pay, but can't pay on time consistently to be in that A credit category group. They're that B and C category, and they statistically have a higher chance of falling into the default group more so than they would going up to the A credit, consistently paying their credit group. And so the bank makes the bulk of their fees off of those slow payers. So every time you bounce a check, every time you pay late, you pay higher interest, and you eventually pay. It just costs you more. So there's these same, go back to the case study, this person here, the bank is going to make way more money off of this person than they would off of the A credit person, the A credit person.
That's very interesting, and that they have a term for it, because my mother was a slow payer. She was a school teacher. She paid everything on time. She had A1 credit, but she always felt that she only needed to pay the minimum balance. And I used to get on her all the time, like, you realize how much you're paying in interest? She's like, I don't care. I just die with this bill or whatever. And I'm like, and so that is it's interesting that the industry has identified that it's a habit, and they target the habit based on these interest rates and these programs. So then now let's back it up. I'm backing up. I'm a college graduate, and I'm speaking from experience from a person who works for me who's a recent graduate who was not able to get a credit. So how do you get a credit card if you didn't get one while you were in school?
Yeah. So I have a dynamic answer to that question. And so I'll start with I don't have children. I do have a slew of nieces and nephews. And so as they become teenagers, and by the time they are 13, I add them to my American Express card as authorized users. So they
Mm,
don't get the card, but they do in fact get the benefit of having an open platinum American Express credit card on. And the thing around that, again, going back to some of the cultural nuances, in the Black community, it is not uncommon to have a co-signer of a parent or a grandparent. And so I am of the mindset that I do not want to co-sign for any of my nieces and nephews. I will set you up with your own credit for you to mess up and figure things out on your own. But
right.
if you're smart, you'll not only take the benefits of the things that I'm giving you, you'll also listen to some of the life lessons financially that I'm trying to teach you, that I've either learned through growing up when I was your age, or that I figured out in time just through exposure, just through schooling, just through knowledge, just through my, my lifespan and what I do professionally. So this person that that's a young professional that can't get a credit card right now, I would almost be tempted to understand their journey and how they figured out that they couldn't. Did they apply for 20 credit cards at
Yeah,
one time?
they applied for several credit cards.
They have a ton of inquiries that can scare off vendors, especially now during COVID-19. You know, do they have certain things that show up as collections on their credit? Like maybe when they were in college and they moved out, they didn't pay their last month's rent,
No, I
or
looked at their credit reports. I'll tell you the only thing that the person had was student loan debt of like $100,000, but no credit, no collections, none of those
were
things.
those
But
loans in
never had a
default?
credit card though. Never had a credit card. Has
Were they
money in
in default,
savings.
or were they deferred?
Hmm?
Were the student loans deferred, or were they in default?
No, they're just paying on time every
Okay.
month. So
Okay.
they're
So
paying a
they're
month. So they're paying a month every time.
mhm.
They have $5,000 or $10,000 in the bank in their savings account.
Yeah.
They have a regular debit card with their not
Yeah.
credit card, but their checking account that they pay. And so no defaults. And I looked at their credit reports, and what I think is this person just missed the window. Like if they would have gotten credit cards when they were students, which they make it super easy to get,
Yeah.
they fell
Yeah.
outside that window. And so
Mhm.
now this person is now added to their parents' account to do what you said you do with your nieces and nephews. But how does that help?
So it gives them a credit history. So they then get to almost cheat the system in a way. So my 16-year-old niece has American Express Platinum card according to her credit bureau. And she has the benefit of having this open account. So,
But it doesn't show up as just an added name on the account?
so there are several different ways that you can add an authorized user. You can call and just add the name and they'll issue a card. You can call, you can add the name, and you can add the date of birth and social security number, and then it gets effectively placed under their credit report. Now it'll show up as an
Oh,
A, authorized user, but it doesn't negatively impact them. It positively pushes their credit score higher, because here's this account, they're only 16, it's been open for 20 years. So they get the benefit of your credit history.
got it. And then so so on that note, when do you transition your nieces and nephews off, or as a parent, not just you specifically, but if I'm a parent, I have a 16-year-old, I put them on my account, when do I encourage them to get their own credit card?
So this helps them. And there's a right time to get things. And I think that's specific to that person's needs, to the family dynamic, and to the goals that you're trying to accomplish, right? And so for me, my nephew is now 25. I still have him on my accounts because why not? And
Oh,
so
okay. So yeah,
even,
they can just
even
stay
if
on
he
forever.
even if he missteps, my credit history still helps him not to fall so low on the credit scale of scoring, because he still has these other things that are there
And
that
it
are
doesn't affect you as long as your card, as long as you pay it. Like if your They
Well,
have.
yeah, it's my account. He doesn't have the card. I don't give, none of my nieces and nephews have the card. I have the
Oh,
card.
that's a life hack. I didn't realize you could do that. I mean, I would just think that they would just have to give them the card, so you can
No,
get the account, authorize them, and they never have to spend anything.
no, they don't have. I would never give.
Oh, so it's not like okay. So this is the thing. This is the thing I was interested on. You know, like for you or me, if we have a credit card, the credit card company wants you to at least have some activity to even maintain the card. But for
Mhm.
an authorized user, you don't have to do that.
No, because it's tied to your account. It's still your account. They don't create a different account number.
Mm,
Yeah,
okay,
they don't.
okay,
They
okay.
don't create a different account number. Some credit card vendors do, but it's still linked under the main account, which is yours.
Oh,
So
because I was encouraging the person I work with to. I said, make sure you spend on your authorized card that you have from your parent. Make sure you spend like $5 a month. So they don't even need to do that.
no, no. As long as their parents are using it, they don't have to do anything. I'm shocked that her parents even gave her the card. I mean, she is a young adult, but for me, it was me adding a 13-year-old to my account, and so they're just starting to learn about credit, and this is one of the things I'm doing to teach them. But I just, at that point, I wouldn't have been willing to give them the actual
Yeah, yeah,
card.
yeah, yeah. No, for my son, he has a platinum added to my account, but that's just so he can use all the lounges and stuff when he's
Yes.
traveling. You know.
And that's the other thing too. So my nieces and nephews, unlike me, I didn't start traveling the world until I was 20.
Right,
They've been around the world twice probably, and they're just cracking 10. So, it's a different,
right, right, right.
baseline that our kids today are starting with than what I think you and I, we kind of talked about our backgrounds and where we came from. So, we weren't traveling the world as young
Right,
kids.
right. No, that's interesting. So that's good to know. So one way to to hack the system if you're a person without credit as a young person
Mhm.
is if you have a parent or a niece or or aunt uncle who is willing to add you as a authorized user, that will
Yeah.
help you build your credit. Now the second thing you talked about is secured credit cards. What's that?
So again, and I would urge your friend or your colleague to find, so just like you have A credit consumers and B credit and C and D, you also have A paper lenders and B paper lenders and C and D. And so perhaps she's applying at A paper companies that right now have changed their model in order to accommodate
Mhm.
this financial and just economic
Like
impact that we're
Chase and
having from
Citibank.
COVID-19. Right.
Okay.
But Citibank also has Citi Financial, which is the C and D company under them that tailors to the C and D paper consumers. And so maybe she can't get a Citibank credit card, but she probably would have a better chance of getting a Citi Financial credit card. Same thing with Beneficial. Same thing with, a lot of these larger banks have these C and D paper companies. Or yeah, I don't know if Cross Country is still in existence, but Cross Country, they marketed themselves to the C and D paper credit consumers because that's what they afforded. Now you had a much higher interest rate, but you would otherwise not be as successful getting a credit card with an A or B paper company. So you would come to them to build your credit. And by doing so, you would have this secured credit card
Okay.
where you actually get approved for the card and then you actually fund the card. So whatever money you would deposit onto the card would in effect be your credit limit.
And that also doesn't affect you in a negative way by having that, and it shows what payment history. How does that work?
Yes, it helps you show payment history. So if you have a C or D paper company's credit card, you're in fact just putting yourself in a position to build your credit score by showing the reliance factor can go up with you because your history is there. You're consistently making those payments to your card. And so this is most beneficial to folks who actually don't have credit, the colleague that you mentioned,
Mhm.
or who have had some missteps in the past and are trying to rebuild their credit and they can't get a credit account with a larger financial institution.
Well, let's take it to that level. Now I have a low credit score. I'm a regular person. I'm working in my career. I have a regular job. I'm not working a kind of an hourly job, but I have a regular job. I'm making like $50,000 a year. I'm doing all right, but every time I try to go look at getting a house or getting a car, it says, oh, your credit score is not good. How do I improve my credit score? I feel like I pay my things on time. How does that work?
So feeling like you pay things on time and actually paying them on time, I think is a thing that you want to be careful with in the language that you use. And the reason why I say that is because, I could feel like I pay them because I send them money whenever I think about it, but that may not be every 30 days, right? So taking into account a revolving credit card, uh, mostly 99% of all credit cards are revolving debt, meaning they're due. You can charge them, you can pay them back down. They're due every 30 days unless you have a zero balance. So let's just say the due date is the first of the month. If I didn't pay the minimum payment even until the second of the month, well, I'm not 30 days late, so it's not going to show up on my credit report. I am, in fact, 2 days late, but there's now a late fee that's going to be tacked onto that minimum payment,
Mm.
right? And so I'm internally telling this institution that I'm not as reliable as someone who's going to pay on or by the first.
So,
So
so, I mean, not to interrupt you. So you're saying if my credit card is due on July 1st, but I pay on July 5th or the 15th, as long as I pay in July, it's cool, right?
no, it's not. It's not
What?
cool
It's
because
July.
revolving debt is due on the day that it's due because it's a reset every 30 days or every 28 days or whatever the billing cycle is. So if you make an accident, and I actually did this once, my credit card payment was due on the first. I paid on the first. I charged some things up and I knew I was going to make a payment the next month. So I sent the payment in early. So in effect, to my credit card company, I paid twice in
Mm.
one billing cycle and did not make the payment for the next business cycle because it was revolving debt and not installment debt. Installment debt, there's a fixed payment that you make. And so if you make those payments, every day, in fact, if you make if you take a 12-month term and you make the payment that's due in a 12 days, time
Right,
period,
right, right.
well, you're effectively cutting down your interest rate, but you're not hurting anything because it's a fixed payment. But revolving debt is you being able to use that
Right, right,
credit
right.
line that you've just paid down. And so you have to pay every 30 days. And
It's
if you don't, but here's the trick. If you're having some financial difficulty, and I've actually advised a few friends of mine from college about this who didn't have a job and who were going into a situation where either they were dealing with a divorce and they had, money that they needed to put elsewhere. There isn't a problem with how much you pay. It's how consistent you pay it. So if your minimum payment is $30 and you need that $30, just pay $1. Pay that $1 on time though, every 30 months, every 30 days, and you'll have that other $29 to do with what you need. Now you'll get hit with late fees, but that will be between you and the company. As far as your credit will stay pristine.
Wait,
If
hold on. You got to back that up. That I did not know about. So you're telling me that if you send in a payment to your company, it's not the right amount, but it is an amount, and you're consistent. Every time your payment comes up, you would get hit with the late fees, and they would tack on that amount. But as long as you're paying towards your bill every month on time, they can't say that you're late.
because credit reporting is about late payments and no payments. If you make a payment, they have to accept it and report it. So that means that they can only report what's 30 days or later, right? So if you're 1 day late, they can't report it. If you're 10 days late, they can't report it. If you're 29 days late, they can't report it. The second you're 30 days late, they report it. Now, this theory, this application does not apply to mortgage companies
Oh no,
because
right, right.
companies say that they will hold your payment in suspension until they get a full payment to apply to
Right.
your payments. It doesn't work on home equity lines of credit, even though the concepts are similar with the revolving. These are attached to homes, and so there's a different principle there. But with unsecured loans, with credit cards, with car loans, with installment loans, with commercial credit, with store credit cards, yes.
Interesting. I mean, that's good to know. That is also a way that people can make sure that they don't damage their credit
Well,
when.
and ideally, it's not something you want to do as a way of life, but if it needs to get you over a hump. And I would say this a lot of times, and I can only I speak, also I try to answer these questions from a cultural perspective because I am a Black woman who comes from a very diverse background of Black
Mhm.
family. And so, it's not a way of life to be, but if you need to get over a hump, a lot of times when the people that I know who look like me need the loan, they actually can't qualify for it, right? And so, if you and your husband bought a house together off of both of your income and you're now getting divorced and you need a home equity line of credit to help you get over a hump, well, you're not even going to qualify for it because the mortgage payment and the amount of house that you bought was based on two incomes and you now have one.
Right, right,
Right?
right.
So I say to people, even if you don't need it, get the credit line now. Let it sit. Let it
Mhm.
sit because it'll be your backup to your emergency fund and your rainy day money. Right. So if it turns out that you actually need to touch your credit and get a home equity line of credit, you have it there already. You don't need to apply for anybody. They can't take it back. It's there for you and you can use it as a backup to your emergency funds.
So to clarify, then, what
I'm
you're
sorry.
saying.
Am I
No,
being
no, 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 no. I just want to clarify for all of the viewers, right? So to clarify, so to improve your credit score, you need to. So you're trying to rebuild your credit. You need to pay your bills on time, or make sure that you have no missed payments or late payments.
correct?
You have no collections, right? And that you are reducing the overall balances on your card because that's what you were saying that companies do not like you to have. So you want your balances to be 30% or less
Correct.
per card.
No, overall.
Oh, so overall, so you could have one card that's at 70% and
Yep.
one card is at 10% as long as the overall thing is at 30%.
Yes.
And then now the way credit card companies review or look at and no one has figured out the algorithm, but we kind of generally know. Revolving debt versus installment debt. How do they look at those and what's better? Or is it you want to have a good mix?
So I would say there's no clear answer to how these reporting agencies look at them. And I do want to take a step back really quickly. There are three major there are three major credit reporting agencies,
Mhm.
but there are over 2,500 reporting agencies in general throughout the United States.
Really?
And yes,
I thought there was only three.
there's just three major ones that people look to, but there are over 2,500 reporting agencies.
Oh, wow.
Yeah. So Equifax, TransUnion, and Experian are the main three.
Mhm,
And
mhm.
typically they cover coast. So Equifax is more East Coast. TransUnion is more Midwest, and Experian is more West Coast, or is it vice versa? I think it's vice versa.
Right, 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 right.
TransUnion and Experian. So typically, if you're going to a vendor in that particular region, 9 times out of 10, if they don't pull all three, they're going to pull the one specific to their region. So if you're on the East Coast, 9 times out of 10, they're just going to pull your Equifax.
Right, 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 right,
If
right.
if they don't pull all three. If you're in the Midwest, same thing. They'll pull your I think it's TransUnion, and if you're on the West Coast, it's your Experian.
Now, then, okay, so again, along that same vein, how often should I pull my credit report if I'm just a regular person?
So that's a good question. And I'll answer it with information that you can use to decide how often is right for you. There's so many new credit tools out there that allow you to monitor your credit. I don't think you necessarily need to pull it as often as you did in the past before these new laws came out. In the state of Maryland, where I live, you can get a copy of your credit report once a year for free. Now, that being said, all of the banks, most of the credit unions, and the smaller community bank institutions offer you free credit access, so you can at least get your credit score. So if you bank with Citibank, if you bank with Wells Fargo, if you bank with SunTrust, they have now an option where you can check your credit score just by clicking onto it. So they'll show you at least your credit score. There are also apps out there, MoneyWise, Credit Karma, that are free apps that you can download on your phone, and you can actually see your credit lines, your trade lines, if you will. So you have access to your credit report real time. I used to, though, before these changes happened in the last 5 to 10 years, I would pull my credit every January, around the time I would need to change the battery in my smoke detectors. It was just like a thing that I did it,
Mm,
or I would tie it to something that I had to do annually. So if I file my taxes, then I am actually pulling a copy of my credit report. If I know I'm going to buy a house in the near future, then I want to see my credit report first. I don't want any surprises. I
right,
want
right,
to be
right,
in a
right.
position to address anything that maybe I wasn't aware of before I start to go after, this big ticket item.
Yeah, you're correct. The world that we live in now is very different from the world that was there when you and I were in college, right? Because I feel like you could get it once per year. It was kind of a hassle. It had to come in the mail. Now every credit card company, for the most part, if you have a credit card with a major bank, they're offering you your credit score,
Yeah.
uh,
And
which
even Experian and Equifax have had a few data breaches. And so they've made it possible for you to have accounts with them directly,
right.
and you can log in and actually see your credit report online. So, unless you really want a hard copy, you don't need it. And it's already 30 days old to begin with. So if you got it in the mail, then it's, anywhere 35 to 37 days old.
Yeah, no, I no, definitely. And as a person, I think for folks who are definitely in the middle class, upper middle class kind of income bracket, I say that they should always have a service that they pay for, so you get constant monitoring and things like that. Like for me, I can go on my account anytime and check what are new credit accounts opened, what
Mhm.
increases and decreases in balances, because it covers you for a lot of different ways, like credit card, at least for me, credit card theft and things like that, because I've definitely had my identity stolen back in the day. Not recently, but
Yeah.
probably like 15 years ago, they got me good. Like, they charged like $50,000 on my American Express. I was like, whoa.
Wow.
But let me just tell you, after that, my credit score shot up because they cleared everything off my credit report. It was awesome.
Yeah. Yeah. No, I had my wallet stolen, and thank God I could pull up my Credit Karma app and go through, because I have so many credit cards and I don't use any of them. I literally have them for show, again, to whip out when I need to get a lower interest rate on, a big ticket purchase item like a house or any rental property that I'm looking to buy, or a car. Right. And so I have all of these cards that I don't use them. So I couldn't remember where I had most of my cards. And so I could pull up my Credit Karma app, and I went through one by one, canceling all of my cards and getting new ones reissued.
So okay, so and we'll do a follow up program on just credit cards in general, because I think that that's something important that people need to learn about. But what is how many accounts is too many accounts? Because I always hear different people talk about credit cards and things like that, and they're like, man, you shouldn't have so many credit cards, or oh, you don't have enough credit cards, things like that.
Yeah.
Should you always get new accounts if there's like new promotions out just to get the points? Like, how does that work?
No, you want to be careful with being like a latest and greatest junkie. I would say, again, there's no exact answer, but my professional opinion would be to have anywhere from 3 to 6 trade lines. And you want to leverage those against how many mortgages you have as well. And so that will balance it out. You don't want to have a bunch of credit cards and no mortgage, or one mortgage. It then goes back to that diversity of what you have on your credit. So
Right.
on your credit report, so you do want to have some revolving lines of credit. You do want to have maybe 1 or 2 store credit cards like Banana Republic, or just any credit card at the
Mhm.
store level.
Right.
And you also want to have like an installment loan, and you can double your car, and that could check that box for your car note. And then you definitely want to have at least one mortgage, because a mortgage, your high balance use, that's the quickest hit to get your credit score to jump. If you notice, there are people who, and I'll talk about this in a second, because it's just one of my pet peeves and it drives me crazy. There are people who are about to buy a house, and before they go to closing, they will buy a car, and it will jack up their debt to income ratios out of this world, and most times now disqualifying them to even buy the house. And it's just like, that makes no sense to me, because once you settle and buy a house, within 30 days you'll be getting all sorts of credit card offers, all sorts of offers to come buy a car, because the
Mm,
house is then attracting all of these things. So you could get that same car, but after you close, if you qualify, right? And so
right.
you want to
I
be
think
very careful with
no, but
with
I think you hit on a good point, because it's counterintuitive, because most people would think, well, if I buy this house, I'm not going to get the qualify for a car, right? Because my credit thing shows that I just had a big ticket item.
Yeah,
And I think that's why people think, wait, let
just
me
the
get the
opposite.
car first.
So
It's not,
once you buy a house, then you become super attractive because that shows stability, that shows your level to consistently pay, that shows your commitment to wanting to have credit and being able to pay something for 30 years, right? So now all the credit cards out there want to attach to you. You know, most of the car lenders, they want to attach to you because they see that as like you're driving that stake into the wall. And that's the huge foundation that they're looking for. If you own a
Right,
house, then now all of a sudden they trust you with paying their much, much, much more smaller debt. So if you're paying $3,000 a month for a house, why wouldn't they let you finance $1,000 a month car, or give you a credit card with a much higher limit than what you would have gotten if you didn't own a house?
right, right, right. So, okay, so that's good to know. I mean, we'll dig in more into that as we do more of these Wealth Wednesday things when we talk about credit cards, because I really think that's an important one. I mean, like,
Yeah.
you hear so many myths and stories about, I should get this card, I shouldn't get this card, and then they offer all of these. You get 50,000 points. I mean, people aren't traveling right now because
Yeah.
COVID-19, but back when they were traveling, people were trying to get those points so they could travel. So,
Well, and here's the thing. The scrutiny to buy a house is way more involved than even to buy a car. They don't necessarily check anything. They pull your credit and they see your score. And that really drives if you have to bring in documents. I haven't brought in documents to buy a car in the last 10 years because they see my credit score. So I say all that to say, there's 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 some wiggle room with your ability to purchase a car than there ever would be in purchasing a house, because you have to prove every single thing that you're saying on that mortgage application. You have to show all of your income that you actually pay taxes on. So if there's some things that you're doing that maybe you just started to generate revenue on and you haven't reported on your taxes, your mortgage lender wouldn't consider it unless you've been getting it for 2 years and you've been paying taxes on it. But let's just say you're looking to buy a car in October, but in January you started a music lessons business and it's been bringing in a ton of money. Well, you now get to disclose that on a
oh
car
wow,
application. They're not going to tell you, well, you need to bring us your tax returns or this, that, or the other. They're going to first look at your credit score. Your credit score is really going to be the main driver of what interest rate bracket you fall in.
right, right, right,
And
right.
from there, they may ask you for things depending on how far down on that scale you fall, if they even give you the loan at all.
So if you have a good credit rating, your good credit score, something, and it varies somewhere between 730, 750, and 800 or 900 now, because I think the scale has gone up.
Yes.
You pretty much can get any loan you want most of the time.
For the most part, yeah. For the
Hmm.
most part. And it really depends on the product. It depends on how it's underwritten. But if you fall, I think the last time I saw my credit score was 855. I'm not doing anything super special. I'm just paying, the credit cards that I do have, even though I don't use them, there are rare occasions where I try to use them at least once or twice a year to keep them from automatically closing out.
Right, 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 right.
Um, and so I have all of my credit cards set up on auto pay. So, 9.5 times out of 10, I'm going in to pay the balance off whenever I use that card. But if for whatever reason I forget because I don't consistently use them, my payments are being made on time. That's like my backup for me. I keep everything up here. I do a lot of things probably that, most people will forget about, but I tend to keep everything in my mind. But if
Right,
I,
right, 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 right.
I happen to forget one thing, it's automatically being done for me. So alerts are the best thing that financial institutions ever came out with, or being able to set up auto pay. Like, I don't lean on auto pay in that way. Auto pay is in the event that I forget, which it's rare that I do, but it has happened. I've been out of the country or something has come
Right,
up and I
right.
forgot I paid for some minor thing, and I'm gone for 30 days in another country. So these things tend to have my back, and I set it up that way. But
Well,
I'm not the one to have I've charged all this stuff and I'm carrying over balances. I'm paying interest on those balances, and I don't have the money to even make the minimum payment. No.
I mean, and it's interesting you say that, because I think about, like, the world is so much easier now. I mean, there are reasons why people don't pay their bills. You may not have access to money. You are, hourly employee where you're only getting a certain amount of fixed income. Uh, but I think about when, like, you and I traveled a long time ago we were in Egypt.
Mhm.
and you were there for a long time and your bill came up and you didn't mail your thing, there was no auto pay option. There was, like there was just not those kind of things. I realize, I feel like young folks, young
Yeah.
minority folks, young, black folks, I think that they don't understand the world is much easier for them now to
Yeah.
be able to have good credit scores. Like
Yes.
it sounds difficult, but I think that it is easier. And then, so I mean, let's get into some of the resources that are available. Like I know NerdWallet is one. You mentioned Credit Karma is one.
Yep.
The FTC is one, and I think there's another thing called USA.gov credit reports. They have their site. But
Yep.
what are some of the other resources you think people should go to look at for learning more about credit reports and things like that?
Yeah, so I definitely like Credit Karma. I like Credit Wise. I definitely think going through your financial institution, so not just having a checking account with a financial institution and not considering them or thinking of them as a resource for you. So if there's a bank that you like for whatever reason, you should look to build a relationship with that particular bank. You should not be a person who has your checking account here, but your savings account is here, and then you have your credit card over here, and then your mortgage is over here. The more relationships you have with a financial institution, the better you increase your chances of getting more credit when you need it for other things. So if you're looking to start a business, don't go to your bank first, um,
Mm,
because there's so many financial institutions out here. A lot of people don't make that connection to build the relationship with where you have primarily your main account. So I have various accounts with credit unions and with other banks that are not my main accounts for different reasons. So because I have rental property, I want it to be very easy for my tenants to pay the rent. I also want to make it a better use of my time. So I'm not driving to each house personally collecting rent. My time can be spent better, especially in this, to your point earlier, in this age where it's just so much more easier to do. And so I have all of these accounts open so that the tenants can pay their rent there, but
right,
I
right, right,
can
right.
make better use of my time. My main bank is Citibank. And for the reasons also that we talked about before, is they have a global presence, right? And I'm familiar with their processes. I'm familiar with how to access them, especially online. They have one of the better, or if not the best, bill payment system
Oh
um,
yeah, yeah, no, I agree. I
that
agree with
I've
that.
experienced. And so, being able to pay anybody, whether they're a merchant or my cousin Ray Ray in Florida, as long as it's $1 or more, they will cut a cashier's check and send it. They don't
Right.
just mock what you do and write a check. If the money is not in the account, it does not come out. So that, covers you from overdrawing your account. You get an official bank check, which I think is important. And so you can track everything and you can actually see, you
I
know,
love it. No, you are correct. I love Citibank. Citibank is
so
like the best. Um, I We won't go too much into banking because I think that's what we'll do for our next Wealth Wednesday. Matter of fact, we're going to tell people to come back and watch us
yeah,
next Wednesday because we're going to talk about banking because I think banking is our next thing that I think can help build our communities,
yes.
help build our build your credit. I think all of these things go hand in hand, and I think people don't talk to their children enough about finances and how that thing works.
Yep.
Um, and I think in our wellness financial series, our wealth, well, I should say wellness, wealth financial series, because we're trying to make our communities better. We're going to talk about these things that are actually going to help people build wealth and help get their financial health in the right place, right?
Yeah.
And this is the best time to do it. I want to thank you, CD. Like I said, I always love talking to you. I think that you have been just a remarkable friend over the years, but also a remarkable financial kind of advisor and guru. And I'm happy that you are sharing your time with me to get us out and to talk more to our communities about the things that we think can help them build wealth. Do you have any closing words? I'm sorry, I didn't mean to cut you off, but
No, I think my thoughts are this can help, anyone, but especially people of color. I'm happy to do it. And I definitely would love to hear what your viewers want to see next because if it's something that falls square in my wheelhouse, and I'm pretty sure it may, if it's of a financial nature, then I'd let that drive how we have our discussions. But I'm happy to have these conversations because I think it's really important to educate on these social financial issues and have these cultural undertones in our answer, because a lot of times a generic answer may not help the Asian brother or sister who's looking for this exact answer to their question, right? And so it may not help our Black brother and sister who again is looking for this information. And so I think a lot of our white counterparts who probably could still be looking for this information, but more often than not they're getting it directly from their grandparents or from their mother or from their
Right.
father. They've had these generational education conversations, whereas we haven't consistently had those. And so I think it's important that we get this information out there as much as we can.
I appreciate it, and I will catch up with you for sure next time so that we can, talk about banking, because that's what we're going to do next. So, with that, thank you guys very much for joining us today. Please, please, please join us again next time. Like I said, we're going to talk about banking, and then every week, if you have topics that you think we want you to talk about, please drop it in the comments below. We have enough professional friends and resources that we can probably talk about anything that's related to finance and things like that. But please let us know what you want to talk about. Sometimes we just talk about foolishness too. So let us know what you want us to talk about. We can do it. But every Wednesday, join us for our Wealth Wednesdays. And thank you again.
Subscribe right below.